It's easy to make $100 a day trading cryptocurrency. All you need is the right strategy. The best way to make $100 a day on cryptocurrency is to invest $1,000 and track a 10% rise on one pair. This is more realistic compared to investing $200 and tracking a 50% rise on the pair. The trick is always to put in a substantial amount of money and increase your chances of making a profit from it. If you want to make $100 a day, it is clear you need to learn more about day trading. Luckily for you, Crypto Clipper, we will show you the way with something that can work for people who are dedicated and willing to invest in this system. The first step is to have time, invest a little bit of money, and use the right software. Remember that while the first step is completing any of these amazing courses, the second and possibly more important step is taking action, even if it's an imperfect action. Day trading is a great way to invest in financial markets. Unlike traditional investing, which requires you to wait for your investments to make a return, day trading means opening and closing your trades on the same day. Trade prices could change on a day-to-day basis, and traders can make money by using their expertise to predict what's going to happen next. They even trade items like currencies, stocks, services, and more. You may be hesitant to trade a lot of money because you don't have any, or you're unwilling to take significant risks. In this video, we'll show you whether it is possible to start trading with a small amount. We'll also give you suggestions for safe ways to trade as a noob trader. Here's how you can become a day trader with only $100. Not sure what to look for in a broker? We'll show you what's important and how to choose the right company. Then we'll teach you how to build a solid strategy and open your first trade. Step 1. Find a brokerage. If you want to trade with a small account, your broker should offer some features that are specifically designed for this type of trading. So if your broker charges you based on spreads instead of commissions, the benefit of a spread-based model is that the size of your trade isn't a factor. You won't be charged the same amount for trades of vastly different sizes, and so it'll cost you less per trade. The spread fee is a better alternative because it charges you based on the number of contracts traded and lets you subtract the cost from your total as a benefit. It's important to pick the right brokerage to trade on because some have higher minimum deposit requirements. If a broker has a minimum of more than $100, you can't do it unless you're willing to put up the entire amount. With such small price movements in day trading, no matter what your investment is, you won't have any reasonable earnings. If you invest half of your funds in a trade and the price moves in your favor by just 0.2%, then you still don't make anything. Leverage is the key concept to trading on margin. If you trade in the United States, your maximum leverage is 50 to 1. Alternatively, if you are in the European Union and trade stocks, your maximum leverage is 30 to 1. This is due to the domestic regulations. The maximum leverage varies depending on the location of your trader. For instance, in Australia, traders could use up to 1,500 to 1 leverage. However, ASIC regulations introduced in November 2017 limit this to 30 to 1. Here are a few of our favorite sites for day trading. Number 1. Centerpoint Securities. This is the best for momentum traders. Number 2. Public.com. This is best for trading ideas. Number 3. SoFi Active Invest Brokerage. This is best for IPO investing. Number 4. IBKR Global Analyst. This is best for active and global traders. Number 5. Moomoo. This is best for active traders. And number 6. Webull. This is best for intermediate traders and investors. Here are a few of the best forex brokers for day trading. Number 1. Plus 500. This is best for non-US mobile users. While CFD trading has transformed the financial market, traders need to be aware of the margin risks. This provider has a 79% fail rate with retail accounts, and many investors lose money. Please consider what you can afford to lose and how much risk you can handle before trading. Number 2. Forex.com. This is best for CFD trading. Account minimum is $100. Number 3. IG Markets. Account minimum is $250. And number 4. SetterFX. Account minimum is $50. SetterFX is not a regulated broker by any major financial institution or regulatory body. The brokerage is owned by Setter LLC, which is based in St. Vincent and the Grenadines. Step 2. Choose securities. To make a large amount of money with small trading amounts, you need to hope for a big return. Otherwise, your account will grow very slowly. You can get higher gains with securities that are more volatile. The more fluctuations, the more changes in price, which means your profits go up. That's why currency pairs are suitable securities to trade with money you don't want to risk too much. They tend to have a lot of movements. When you're choosing which forex pairs to trade, it's important to keep costs and fees low. By trading globally recognized forex majors like euros to US dollars, pounds to US dollars to Japanese yen, Australian dollars to US dollars, New Zealand dollars to US dollars, and US dollars to Canadian dollars, you can lower your costs and position yourself for success. The major currency pairs are the ones that have a similar spread. However, they are more volatile because they cost less to trade. Step 3. Determine strategy. You can't spend too much money on trading with only small amounts of money to invest. It's important to consider when you'll trade, the amount of money you'll invest each time, when to enter a trade, how to manage your risk, and what an exit strategy is. Making trading decisions can be difficult, especially if you have no experience. Fortunately, there are a variety of resources available to help you understand the process. For instance, Eagle Investors is here to share insights and information on how it works. You can also sign up to get alerts from active traders or even join a chat room with other traders. Finally, Eagle Investor shares statistics related to its recommendations, which outline exactly how successful the platform is. When is the best time to trade? A good time would be during an overlap with other sessions. For example, when both London and US markets are open, you'll see a lot of volatility in euros to US dollars and pounds to US dollar pairs. The best way to compare currency conversion rates is by looking at the exchange rates. The UK and Europe typically use pounds and euros, while the US uses US dollars. The prices of these currencies fluctuate based on supply and demand, which means that the pounds and US dollars and the euros to US dollars forex pairs are very volatile right now. The best strategy is to invest a larger amount, in some cases, up to 100% of your $100 bankroll in each trade, and the fewer trades you'll have to open at one time. This increases your chances of hitting a single trade of this size. For example, you can invest 60% or $60 in each trade and have no more than one open at any given time. A trader needs to create and work through their trading strategy. Each trader uses various indicators to enter, exit, or manage trades in the marketplace. Some of these indicators are candle patterns, chart patterns, oscillators, momentum, volume, volatility. By identifying and riding a trend, you can ensure high returns. To identify a trend, it's important to use indicators that can help you understand specific market conditions and identify possible trends. Some people believe that trading in normal good conditions is a safe bet, and you should risk up to 2% of your capital per trade. But this might not always be the case. You need to understand the risks and decide how much it's worth for you. Since you only have $100, the worst that can happen is that you lose all of your money. This means you can take a higher risk as your losses are limited. A risk of 3% per trade is reasonable in these trading conditions. You will be risking 3% of the trade amount per trade. So, for a $100 trade, your maximum risk is $3. You can trade up to 50 to 1 leverage in the US. This will give you a total buying power of $5,000. If you invest 60% of your bank in each trade, that equals to $3,000 per trade. Your stop loss order should be at a percentage distance from the entry price equal to 3/300 or 0.001 or 0.1%. In other words, if you buy the euro to USD at 1.1450, your stop loss order should stay 0.1% below the entry price. To calculate it, you can do this. 1.1450 times 1 minus 0.0001 is equal to 1.1439. The stop loss order level will be 1.1439 once you consider these things. With a more aggressive trading style, there can be more of an opportunity for risk. With these different rules on how to exit a trade, you'll have the chance to walk away from trades with less risk and more profit. Instead of placing a regular stop loss order and adjusting it manually, try using a trailing stop loss order. It's safer because you still stick to the same risk management rules, but with trailing stop, there is an automatic reduction in the risk taken if a trend occurs in your favor. If you catch a big trend, the trailing stop will be adjusted accordingly and hopefully increase your profit. If the price of your trade reaches your stop loss, then you'll exit the market and lose any potential future profits. But if it continues to trend in your favor, then you'll keep it open and potentially see higher profits down the line. Your success rate and the profit-loss ratio will affect your profitability. If you manage to get a 3-to-1 profit-loss ratio with a 30% success rate and you risk $3 per trade aiming for $9, succeeding in only 30% of the trades will generate around 7% profit per 10 trades under the previously mentioned conditions. If you do well when trading your current gross by 7% after every 10 trades, and you'll have around $80,000 in your account after 1,000. But that's not always the case. Plus, this is just a high percentage and most people can't maintain it, so they don't. But sometimes it makes sense. The recommended strategy involves only one trade at a time due to the low initial bankroll. You can make around 15 trades a week with this strategy. If you conduct 2 trades per day, it will take 500 days of trading to reach these results with this success rate. There are 250 trading days in a typical year, so that means it will take 2 years of strict trading to achieve these results if you conduct 2 trades per day. To reach $500 in your account after trading for less than a year, it'll take approximately 250 trades. To reach 1,000 in monthly earnings from trading, it'll take about 360 trades running at the same pace. As you're planning your strategy, it's important to keep potential risks in mind. You could decrease risk, minimize investment in a single trade, and open more than one trade. Step 4. Start trading. Before you create an account, first visit the official website of your broker. From there, choose the desired account type and make sure it allows you to trade with a minimum of $100 on margin. You'll also need to submit personal information like an email address and phone number. Once you've submitted your information, they'll send a confirmation email. You'll need to verify your identity by sending a copy of your ID, though this is likely the only time you will. If you want to fund your account with less than $100, you won't be asked for any earnings verification. Once you create an account, funds will need to be added to trade. Use a preferred payment method to do so, and then upload a trading platform and log in. Make sure that the leverage is set at an appropriate level. To start trading, open the trading box related to the specific currency pair you're interested in. For example, if you wanted to trade euros to US dollars, you would go to the Euro to US dollar tab and initiate a trade. Once there, select your desired trading amount and make sure you set up at the stop loss orders or trailing stops to control risk. Can you start a day trade with $100 in your account? The short answer to your question is yes. The long explanation is that it depends on the strategy you're planning to use and the broker you want to work with. You can trade with as little as $100 if your broker allows it, but this will never be a successful strategy unless there are careful calculations behind it. This is why you should support the idea of trading only with $100 through research and calculation, as well as strict risk management rules. Day trading can be difficult for novices. This is why some people try out day trading with a smaller bankroll first. At $100, for example, to avoid risk and ensure a healthy return, you'll have to make some pretty big amendments to your strategy. Luckily, there is a way to practice this system on a demo account before trying it with real money. A demo account is an excellent way to get adjusted to the trading platform you plan on using. For example, once you become comfortable with your demo account, you can switch over by creating a $100 account and trading from there. If you don't want to pay 50% in taxes on earnings from cryptocurrency, this would be a great place to put your gains. By deferring income and reinvesting any profit, you can minimize the risk and maximize your gains. Investors usually have a choice based on the type of investments they are interested in. There are great deals with safer profits and lower risks, but also less reward. Then there are other investments with higher risk for the chance of a greater return. That's it for this video, Crypto Clipper. Remember to subscribe to our channel. And if you feel like we've delivered value, please share this video with one person. That's right, just one person. as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your fortune. Remember, you can watch video after video, but it isn't until you take action that you'll start to see results. See you on the next one.